Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Thursday, May the 31st, 2012. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. The low of today's candle has traded substantially past the previous low. So throughout the trading day, the sellers attempted to build up some solid bearish momentum, but they found support around the round number 1300. Very important level there that I've highlighted previously. 1300 extending down through 1295, which is a previous area of support, and extending down to the swing low around 1291. So a very important area. The market has continued this trend to the downside on a spinning top type candle, and that does raise some serious doubt about continuation of the trend to the downside. It's an indecisive candle because initially we have a small body, which means that the sellers have only made a minimal amount of net bearish progress as opposed to the large amount the previous day, but we also have the shadow on the top and the bottom. A larger shadow on the bottom, and that's representing the sellers losing commitment around the 1300 level. So some very strong price rejection from that solid area of support. The shadow on the top, however, also represents the buyers losing commitment. So we have this battle that's gone on throughout the trading day between the bulls and the bears, with neither side really taking control of this market. The buyers have closed with weak control, however, because they have just closed up above the midpoint level, but we're so close to the midpoint level that basically neither side really has control. Very weak control, however, by the buyers, but not terribly significant. So this market is set up for a potential change of trend. Not the sort of candle that you'd like to see at the as a trend to the downside as attempting to establish itself, but combined with this solid support down below, there's a good possibility that the market will attempt to retrace back up to the 1333 important level of resistance. In terms of the Fibonacci extension that we've been examining, we are in a downtrend now, so we're comparing the extent of the downtrend to the previous time the market was trending down, and that's this small downtrend here, and we can see that the market's reacted to the 100% level, which was highlighted yesterday as a potential area of support, and we've seen rejection from that area, and that level is basically at 1303, 1302.97, and coincides with the market trading down to around that round number 1300. So we could possibly expect there to be a change of trend to the upside here. Also, in terms of the Fibonacci retracement of the previous upswing, and the market has traded through the 61.8% level today. There was potential for that area to hold yesterday, but the sellers did attempt to close the market down lower, but they did lose their commitment around the 78.6% level and down near the 100% level at 1295. So if you recall, that was highlighted as a very, very strong zone of support for this market, and there was no ease of movement by the sellers around that level, and the buyers came in strongly throughout the trading day to close the market back up roughly around the midpoint level. In terms of Ichimoku, the market is bearish in the long-term time frame by trading below the cloud. The market is also bearish in the medium-term time frame by trading below the Kijun-sen, but basically neutral in the short-term time frame by trading pretty much at the Tenkan-sen, just below, so technically bearish, but so close to the Tenkan-sen that the market is basically neutral. The Kijun-sen is pointing flat, and very often when it points flat, price action is attracted back towards there, and that's what happened over the previous 4 or 5 days before the current 2 days where there was some selling in the market, an attempt to rally back towards that equilibrium, and it is still pointing flat, and that does set the market up for a rally back towards that level. The rally, however, will face tough resistance around that 1333 level, which was an important level prior to today's trading. Just looking at the Chico span, that's below the corresponding price action, so that's confirming the bearishness that we're seeing in these higher time frames as well. So we have a market that's bearish in longer term time frames, neutral in the short term. Very solid support down below at 1300. If the market trades down through there in a bearish manner, we could see the market trading to 1277, but the sellers are no longer supporting this trend to the downside. We can see long shadows as the market traded to that area and was rejected quite strongly before. Very strong possibility we could see a change of trend to the upside and the market test to 1333.